All right, cool. Welcome everybody, another weekly Zoom. So I do want to go over, I'm probably just going to go over DXY, going to go over a couple trades, and then case studies, just the typical what we do here every weekend. But yeah, let's go ahead and get started. I'm going to go through everything in terms of um what we were looking at with, or pretty much everything I posted today in the, or this week in the channel on Instagram, right? So we had some really good trades this week, like some real nice sweeps here. And number one, let me pull up these annotations. Number one, USD CAD, very simple, um, very simple sweep into a structural disruption into the opposing side of liquidity. So if you guys can see here, there is actually an H4 POI, right? And like I told you guys last week, right, what we were looking for with dollar, right, what we were looking for with dollar was um on H4, we were looking for pretty much a, if we were going to bounce from that point of interest, right, or if we were going to go through and kind of just get a sweep going, and then we would pretty much play the high low range, right, to then continue lower. But how that affects USD CAD, right? Let's go ahead and delete some of this stuff. Actually, I'll leave this stuff here, right? The H4 POI that I was looking at is this, right? For the most part, this overall region here, the H4 candle that's being engulfed. Why is that important to me? Because technically it is a reversal, is because we have just swept a very important high, right? We swept a very important high here, right? And although it may not make sense to short over the long term, because technically, since we're breaking this structure point, right, and we're reacting from this sell to buy here, if you guys can see the sell to buy that created the entire move here, right? If we are bouncing from there and we're breaking structure, then that confirms this reaction from this POI, right? So that could be a sign of unwillingness, and it could be a sign that we're going to, at least, in my opinion, come back up to here. Oh, sorry. That we would come back at least to, let's just say, the buy to sell located here, right? And this is just would be technically a pit stop. This could be a region where we just reverse and then create brand new lows over the next year or so, right? Who knows, right? But all I know is that we probably will come back up there eventually, unless certain things happen, which is, let's say we do take out, for example, this low here, right? Or even this low here, because this is the final low, right? The internal, you can see that there's structure breaks internally here. That broke through into that daily high here, right? H4 daily high. So the fact that we've taken out a very important point of liquidity here could be the sign that we have a type of retracement coming on, or we could just be full on reversing here. Who knows? But all I know is that if I'm trying to buy here, it's a bit high. I'm sending in a premium on every scale, whether it's on this H4, whether it's on the H1, right? You guys know this is semi overextended, and you guys know that I do want a pullback, right? Which would be down here if I was even to be thinking about looking for buys, right? So just due to the fact that we are so high in price, it just made sense for me to look for some type of sell, which is right here, right? And if you come back to this, right, we did see that bullish move to the upside, which is this move here, right, where we come back, react on the POI, and we take out 1, 2 equal highs, and then I'm looking for the transition to the downside, right? There's no engulfing here. This is an Asia session during my kill zone, right? And we do see that final push up here, which we can probably zoom in. Here, right? So after we have that equal highs being ran through, we do have here, we have the break here, which is the CBOS, meaning this is just the pullback to move to the downside. And if we zoom in even more, right, we do see the final leg up here. You guys can see that there is a small buy to sell here, right? This buy to sell right? Which is pretty much the final push up that takes taken out. That is my entry region, right? And then this would have been my reasoning to sell to the downside. So very, very, very good trade. And this ended up going right straight to TP for the most part. Right here, as you can see. So just a very, very clean sweep model, in my opinion. But more importantly, the transition internally could be argued as a type of structural disruption. Why? Because there is a solidified low coming into the high that doesn't fully break through, or we could actually just say it's like an LG because we do take out the high, right? And we fail to, right, continue higher, and then we break out the low that created that final move into the upside. So the fact that there is a transition here confirms the sweep, traditional sweep, right? That is then based on the narrative of the fact that we're bouncing out of the H4 point of interest. And then so obviously our target would be here. And I thought this was going to be it. I thought this was actually going to be where we start swinging to the downside. But as you guys know, that's why I like to take my TPs, right, based on the model, internal model, external target, just because we don't know what can happen after the liquidity has been swept. So that'll move us on to trade number 2. Oh, did I show you guys the wrong one again? Give me one sec. Oh wow, I did. I did. My bad. Let me pull that up really quick. Right. That's my fault again, guys. I'm so sorry here. Yeah, I sent the wrong one again. My bad, my bad. So this is the before. This is a sweet model, but more importantly, we have the OFD variant in here where we have an OFD model. So if you guys are wondering, um the main moves that I'm looking for right these days is any type of sweep model and any type of OFD model. OFD and sweep are kind of like my top two models at the moment, just because they both represent clear transitions, right? Clear bullish to bearish transitions, right? And the gist of this scenario here is, right, the thing about UJ, right? This is also very similar to UCAD, right? Where we're approaching, or we pretty much have a potential external sweep model, but this is on the daily time frame, right? And I've been looking at this for like the past week or so. Like this is from like I think Monday or Tuesday. I've been looking at this for like a couple of days now, and it really looks like we could be looking at something really, really, really big. But obviously, I'm not trying to commit to anything, right? Because currently we have given just delete all this stuff. We have been given right the reaction from where we were here, but obviously you guys know that internally, right, that swing structure is still bullish. So we have a low into a high, and then technically we're still going to pull back. And then if we can get like a structural disruption, then I can justify that we're probably gonna at least bare minimum here, and then after that here, right? And why here? Because there's I consider that weak order flow, just a lot of mitigations, but then it was kind of swept. So maybe we could be looking at this as a potential point of interest, but that's irrelevant. It's far away, nothing that concerns me at the moment. So as you guys can see, there has been a reaction there. So internally, all right, because I was seeing right a move to the downside, and then I see the internal sweep. But more importantly, here the sweep wouldn't have sold me here. What sold me here was the OFD, right? The fact that we have a sell to buy, clear sell to buy that led into that break here and into right this external CBOS, right? The fact that we came back, mitigated that, right? And as you can see here, there is internal structure points there. So once this causes a reaction, then that confirms this POI as valid. And as soon as that is broken through, then that is OFD, right? OFD. But the issue with this OFD was the fact that there was no clear like buy to sell, right? Outside of obviously the overall buy to sell, which would have been here, right? There was no clear POI that I wanted to play from. So I kind of just had to wait a little bit because yes, I could have played this, but my stop loss would have had to be at the high, obviously, right? Um, because I do need some type of solidified point, not internal but external, right? Because this is a solidified point, but that's more of like an internal because that would probably be like a micro, right? And I'm looking for a scalp solidified point to be my invalidation. So based on my entry, you guys can see here that we do have an internal LGC, maybe on a micro, but we did take out the high of a candle and then created an internal structural range. So the internal structural range gives me the option to sell from the point of interest. So we have sweep, OFD, and then obviously the internal buy to sell candle here, right? And SC clearly here, that will give us the move to the downside. And we actually got a perfect entry here, right? Perfect entry. And then that gave me the move to the downside here. But just overall, very, very good. Any questions, concerns with these first two trades? Very, very similar trades, like for the most part, except one of them didn't have OFD. Any questions, concerns here with these questions? I mean, with these trades, I'm sorry. Questions? No, yes, no. All clear. I didn't understand USD CAD. Here. All right. So my hunch here, right? Ignore this. We'll come back to this. My first position here. Let me go ahead and all right. So the main, the intuitive side, I would say, of why I'm taking a position here is the fact that we're very, very high and we've taken out a daily high, right? So I'm anticipating intraday to potentially transition or to at least give some type of pullbacks, just because I don't want to keep buying in a market that, for one, has taken out a very, very, very big um level of liquidity towards the upside, right? It just doesn't make sense to me because I don't want to get caught up, right? I don't want to get caught up. I don't want this to happen to me, right? I don't want to get caught buying here and then losing and then keep continuing higher, right? Obviously, the whole gist of what I look for is internal liquidity, external liquidity, and transitions. Transitions being the most important thing because transitions are what create either the continuation or the reversal. So we have one, two highs. We have the sweep here, which is during New York, right? And during the sweep here, although it's not confirmed, right? The fact that we're taking out liquidity and we're bouncing out of an H4 point of interest, and you could see here that there is structural disruption, right? That means that the internal order flow is potentially bearish. But if we go back to this, right, like the moment that this becomes an opportunity is the moment that this low breaks. The moment that this low breaks signifies to me that we have a sweep, right, of this previous high. And I could have aimed for here, but I just know that if we're causing unwillingness here, that means that based on the structure here, we are failing to continue higher. So it means we're probably going to go for the opposing direction. Would you have entered that earlier at the top where there's an engulf in the 5 minute here? You mean here? Maybe. Let's see. But not on the 5 minute. The sweeps. Actually, yes. That's a good eye, actually. Yes, I would have. The reason, right? Whenever I look for my sweeps, I need it to be a range that is favoring the direction that I want, right? Like I'm not gonna use a bullish range and look for a bearish scenario, right? I have a bearish range, so I'm looking for a bearish scenario. So uh yes, right. The sweet bottle would have been here, right here at this engulfing. That would have been the external sleep model, which if I would have seen this, actually, this would have been a basis as to why I could enter here. That would actually give this more validity. But I don't know if this makes sense. But the gist back to your question number one is the reason why this becomes a trade is because one, I have my time of day, which is my kill zone timing. Two, I have equal highs being taken. Three, right, we do have internal structural disruption here, as you guys can see. There's structural disruption causing that this is a bearish leg. Four, we have the internal structure break at the time of the kill zone, right, which leaves off the final buy to sell as my point of interest. There's a sell to buy zone before. Yes, but this is irrelevant right now. This is irrelevant. This is an M5 buy to sell, bro. I'm talking about daily liquidity being taken. I'm talking about intraday highs being taken, right? Like think about it like this. If your scalp is bearish, but you have just taken out, right, a bull. I mean, I'm sorry. If you have a bullish scalp and you've taken out a bullish daily high, right, that continuation on the scalp may not make sense because you need the external to fit the internal if the internal is to continue, because obviously intraday moves are what build the daily candles, right? So if we have 1 second, if we have a daily candle, right? Let's say we have this big daily candle here, right? That is composed and built by intraday moves, right? Because obviously here, right, we have where is the open of the day? Right here, right? This is the entire Friday, right? The bearish USD CAD closure was built based on these intraday moves. So if those daily moves are dictated by the internal, then I cannot necessarily say that the internal moves are what makes the daily moves happen. So if I want a daily closure, I hope that makes sense. But if I want a daily move to support my internal move, then I cannot really necessarily use the entire trend. I have to use what's happening immediately, which is one, the daily being swept, two, the behaviors internally, which is the equal highs being taken. So if the equal highs are being taken, right, and we're bouncing off of an H4 candle, then how can I justify buying here? This does it. I don't understand how I would buy here if we're bouncing out of an H4 zone and we're taking out intraday highs, equal highs, sorry. I just don't understand how this would then be enough to cause that. And you also have to understand too, just because you have a reaction doesn't mean you're going to get a follow through. You know, just if you have the reaction, you can have a valid POI, but that doesn't mean that you're going to get the follow through. You could have the reaction that could make this valid, sure, but that doesn't necessarily mean that it's going to hold, right? Like we see this all the time. Like here, based on that logic, right? We have the reaction for the POI. This should die, right? No, because this is showing me that this POI is valid. But if we have the bullish conversion, then you can justify buying. You see what I mean? So although we have the bullish POI here, right, we have the bearish sweep, and that candle is showing me, right, the sign of weakness that is necessary to for me to even think of selling the of think of even selling during the session. So I'm thinking about H4 POI. I'm thinking about intraday highs being taken. I'm not too concerned with scalp by the sell to buys, right? If these are overruling. So remember hierarchy. My question was for the user trade. Oh, sorry. Right here. Uh, where? Oh, would I have entered based on the implied sweep? Yes. Yes. Um, because we have the sweep internally here. So like the implied sweep, if you want like a cheat to it, um, I want external sweep and I want internal sweep, and then I want a engulfing. External sweep, internal sweep, engulfing. So yes. So yes, but I actually didn't see that. I actually didn't see this. Um, I really like the OFD here. That's what made me take it. let's see. So, but yes, you're right. Yes, this would have been, excuse me, a potential sweep trade based on the sweep here. And it's a 1 to 5. That's actually very good, actually. Nice, 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 nice. Yeah, that makes sense. That's 100% justified. But like the reason why I kind of want the internal and the external is because the external sweep is going to give me a bias, but the internal sweep is going to give me the timing, if that makes sense. Mm. Okay. So last trade. So I'm gonna go over two more trades, which is the next USD CAD and a loss I took at AU, which was a trail stop. It was like a smaller loss, but um we'll go over it here in a bit. Anyways, I had two positions ready for this USD CAD trade. Right. I was looking for right the continuation because we're clearly in a buy to sell, right? You can see there's OFD here, buy to sell that caused the move to the downside. And you can see the red line being my Fibonacci. And there's actually an inefficiency fill like here, which I'll show you guys here in a bit. So there was two trades I was looking for. One is either we're going to take out right these relative equal highs, come in here. That's actually not equal highs, guys. This is not relative equal highs because we swept here. So we swept there. So this is not regular. I'm sorry, this is not relative equal highs. But I was hoping that this is the I was hoping we were taking out the H1 high. I believe that's what that was. And then we were coming into the 70, right? With my stop loss up here. And then I'm looking for actually lower pricing than this. But the internal move was an internal transition right here, where we break here. That then justified to me that we were going to continue order flow to the downside. But I will say very, very, very aggressive uh stop loss. I really should have put my stop loss up here, but let's go ahead and look into it. Right. And then this was a perfect, this almost tapped my stop loss here. But this is actually very, very good trade. It's like a 1 to 8 risk to reward. But it really should have been like a 1 to 5, 1 to 6. See. Okay. So my first position I was looking for. Let's go ahead and delete a lot of this stuff here. Actually, that's a good note. Even though this wasn't what you're referring to, that's actually a great note to note here. I didn't go over that in the review I made for the private group. Sorry. Um, but anyways, right. Once again, right there's like a common trend with POIs, right? Here, that being the external H4 POI, but then internally, there's also more POIs, right? Like there's then the refined POI, that being right the last buy to sell here, and we actually didn't tap it here, but we actually did come back on Friday, or this is during London, right before London session, that gave me the reaction into the buy to sell, because if you guys can see here, we did not tap it right here, right? So that's a very key. If a POI barely doesn't tap something, I do not imply that as it tapped, because it makes sense as to why you would think that you would consider this to be an implied tap into the POI, because clearly we're trading CFDs and different providers could give you different pricings. Different pricings could give you different candles, and different candles could have meant that maybe on another exchange, or I mean, I'm sorry, on another brokerage, we could have got the top here, right? But if it doesn't tap, it doesn't tap. So I'm not gonna imply that it did, right? Um, which is why I wasn't looking for sales here, if you guys are wondering, because clearly here we can see that there was actually a bullish range, another bullish range, but you could have maybe justified a buy to sell. I mean, I'm sorry, a buying sweep, because like I said, external sweep is the bias, internal sweep is the timing, right? And then this would have been a justification, right, pre-London to buy to the previous highs. But the fact that we came back into the refined POI and then we broke this low, which is the low that created the high into the POI, that is what caused my bias, right? Which is why you see my Fibonacci here. And I really, really wanted the 70 here. I really wanted the 70 because if I get to 70, I'm gonna have my refined, excuse me, stop loss appear, as you guys can see based on this position. And I'm aiming for, right, the previous low here because we could have been potentially sweeping this high, and then this is obviously another point of liquidity. And I was actually looking at a small inefficiency here. I just didn't know if we were going to tap and fill it, or if this was just going to sweep through or just push through like it did. But anyways, right, what's important here is the fact that we had, right, the potential, I would say structural disruption. Right? Structural disruption. And then as soon as it's solidified based on this internal break, why this internal break? Because this is the final high that caused the internal low, that caused the structure break, which confirmed, right, this to be the structural range. And I was looking for the 70, but we didn't get it. And what I meant by the closure was I was hoping that because we had such a bullish H1 closure, we would come in and kind of sweep the high of that H1 closure. I mean the H1 high, sorry. We would sweep the H1 high, maybe come into the 70, and then, maybe give a better closure and then give a transition and then give the move to the downside. But unfortunately, we got the transition a bit early here. All right. So if I'm reading structure here, the only reason why I'm even thinking of selling here is if we're looking at this. Give me one second. Right? Low into high, low into high, right? Low into high, right? Low into unwillingness into break, right? The unwillingness is the only reason why I justified the internal move. But more importantly, the only reason why I even wanted to look at this position is because there's a internal structural disruption here, right? So we have low into high based on this break. Then we have the pullback, solidification, and then break. So that's structural disruption. And that structural disruption, right, is the reason why I'm using this POI as the reference point. But like I said, I really should have used, right, this as my stop loss. And that would have also given me the ability to potentially hold out to the same target as what my external would have been, which is right there at 1 to 6. And let me actually go back here. If I would have done that originally, which it would have smashed through that take profit, that would have been over a 1 to 10, right? So, like I said before, guys, I really think this is the like I think we've cracked it. I'm not gonna say I've cracked it, we've cracked it, that we can finally get the OG high risk to reward while justifying. Oh, sorry, guys. Uh, while justifying the the position, right? Because this is technically a conservative entry to an extent, right? But this is now how we can potentially get, right, these higher risk to reward trades, right? Because this is already 1 to 7, even with a very conservative stop. Um, so yeah, overall, structural disruption off of the buy to sell, right? Coming into the external LG, right? With the target being the 0, or you could potentially the next liquidity point. Or the reason why I use this orange line is because this is a sell to buy externally, right? But yeah, any questions or concerns on that one before I go over my loss that I took this week? Or one of the two, but I'm not gonna go over the second one. Excuse me. I don't think I posted my AU trade. I think it was the same day as my UJ trade. Um, yeah, I don't think I posted that one. Yeah, I don't think I did. But really, really cool, right? We pretty much top ticked and got a very, very good entry here. Yeah, I didn't go over this first AU trade, but I guess since we're here now, we can go over that and my loss. Cool. No questions with you, CAD. Let's go ahead and go into this. So I don't want to get too much into the AU, but my original bias for the week, right? I was looking to see, right? Because like this green line here is once again another daily POI, which a lot of these crosses are at liquidity points from the daily time frame, et cetera. And that's very, very important because we can now potentially see a transition on the intraday time frames, which is important because if you have the bias for the overall major intraday potential swing picture, then literally every morning you could just wake up and look for the same bias. That's kind of the why I really like to note these daily not necessarily closures, but if daily liquidity points are being swept and then we have the transitions, then it gives you the bias for the next couple of weeks, like 2, 3 weeks. Anyways, right, for AU, I was looking to see, right, if this bullish internal range based on the sweep of the daily could give me an internal sweep and then give me the move to the upside. But obviously, we're within the range, and there was a very, very big event. I forgot what news event it was, but it was an AUD news event, and then the news came out very, very, very weak. So weaker to the point where AUD USD was not following dollar in any way whatsoever. Right at this time, all the USD crosses, right? DXY was coming down, so all the XXX USD crosses were going up. This is the only one that was actually going down. And what I was looking for here, right? Actually, let me see. I'll just show you guys the pictures. Pull that up. This is the first bias here. All right, this is my bias. Coming into I believe this was during New York session. Yeah, it was during New York session because this is the 8 a.m. New York Stock Exchange open. But pretty much what I was looking for is one news came out very, very, very weak the night before here. Um, and we came back and we mitigated right in Asia POI. If you guys want to know, the only time I would ever consider an Asia POI, it's usually only going to be on AUD USD because it's an Australian pair and obviously it's an Asia session pair. But two is when during the Asia session, I get a type of sweep or LG or some type of liquidity is being taken during the session. That's the only time I'm ever going to refer to a POI during that session. If not, I'm just going to refer to them as highs and lows. But as you can see, we do have the reaction, right? We do have the low into the high, and then that's broken. We have unwillingness coming into that leg. And the reason why I'm referencing this internal leg or this internal range is because this break here solidifies the internal move, that being high into low, pullback, continuation, right? This here is not unwillingness. It's not unwillingness because this high did not break this high. All right. So I'm not considering that. I'm considering this as a ABC, right? I cannot justify this to be unwillingness just because this high didn't break this. And I'm looking at this as, right, the order flow completing here, right? Which would then tie back to the bias that I said earlier. Um, so that was my bias. My execution was here. Let me see. I'm actually going to zoom in a bit for you guys here. Yeah. So, like I said before to Peter, external sweep is bias, internal sweep is timing. Internal sweep coming into or we have an M3 engulfing, which is very, very uncharacteristic of me. I actually don't really look for sweeps inside of or below M5 just because they work, but they're less consistent compared to the M10 and 15. But here everything just kind of fit, right? Whereas we had the external POI being mitigated and the reaction was clear. We're also within, right, the New York session perimeters, which is I'm trying to catch the um excuse me, I'm trying to catch the volume of the session. Excuse me. We have the CBOS, we have a point of interest, we're reacting from the point of interest, and we have the sweep model, the implied sweep model. And usually you could take it from the closure, but I saw the mitigation here and I'm just saying, what, fuck it, I'm gonna take it here. And that led to a perfect trade. I mean, bro, anything below M5 is less reliable. Everything. Structures were less reliable. POIs are less reliable. Models are less reliable. That's why you need the correlations between timeframes to or structural levels, timeframes, whatever the fuck you want to call them. You need that correlation to support the bias, right? The internal timeframes are just the timing, whereas the external timeframes are the bias. So by default, a model is going to be less efficient internally if it's not supported by the external, right? Like this model internally only makes sense because of the bias that I just said, which was here, right? Oh, here. This is the bias, but the bias is based on a 15 intraday, but the execution M3, right? But this execution, right, is less relevant if we don't have the bias, right? That's why we use the framework, direction, liquidity, execution, right? What's the direction? Down because of X and X and X. Why? Where's the liquidity? Liquidity because of X and X and X. And then the execution because of X and X and X. And then if it's, right? So that was that. And then I'll just go over my quick loss here. I was looking for a, I don't know if I have the mark. I don't know if I sent the markups for that. I don't think I did actually. No, I think I forgot to. Anyways, um, I was a bit confused on the bias at this time, which was here, right? What I was looking at, right? Because you guys know that I was looking for a potential sweep to the upside. And I said in the review for the people who were in the private group, right, that I could be completely wrong and this could just be a sweep model, right? And then we saw here the engulfing, and this could just be the completion to the downside, and I could be completely wrong, right? Could have been completely wrong. And I was, I mean, it's too early to say if I'm right or wrong because we're still in the range, but I was off the mark, right? And what I was looking for here, what I saw now is we did bounce from a potential sell to buy, but it's a very deep retracement. So I kind of anticipated this to be like equal lows, which for the next week, I'm actually hoping that this kind of continues lower, right? Because we didn't give the reaction that I wanted. So what I was looking for now, right, internally, right, is the fact that we had a big bullish move to the upside, right? But we actually mitigated something here, right? You can see here, I think it's an M30. No, M20. Well, either way, here, you guys can see that we're mitigating this POI here. So when I saw this move be very, very impulsive to the upside, I'm still favoring the downside because I don't like how deep this retracement was. This is a very fast move, but this is kind of like could be like a similar situation to the USD CAD trade where we had high momentum into the POI, but we're reacting from the POI, and then internally we are having the transition. Right internally here, what I'm looking at, right, is this buy to sell. Right, we're seeing this buy to sell. Um, we came back. Right, I don't know if we mitigated this actually. No, we didn't. Okay, so that's my mistake here. But either way, the reason why I was looking for the transition here is because we broke structure points here, 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 right? But it's kind of my mistake because technically this is structural disruption, but I don't want to be in the reversal mindset, obviously. I want to be in the continuation mindset externally and internally. So I kind of read this as right relative equal highs here being swept, potentially then causing momentum to the downside. And then we have potential breaks here and here, right? And then from there, I was looking at the fact that we had very, very big engulfings. And then I just kind of took the engulfing, right, as my position. And I think my entry was here. I put it here because this is actually when I entered. I entered a bit lower. I didn't get the full the full POI pricing up here. But I trailed my stop here. I trailed my stop because we had the reaction confirmed. So if we have the reaction confirmed, then I move my trailed stop here. And the reason why I did that is because if this is to break, then this is now technically a LG to the upside, right? We now have unwillingness to the downside. We're not breaking a low, but we have a reaction of a POI. And if we're coming back into the POI after we've reacted, then it's no longer as valid to me. And this ended up just being a loss here. And it just goes to show to me that I was just wrong. And that's okay because the 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 one thing I prefer whenever I take a loss, I want to be completely wrong. I don't want my stop loss to be hit and then it goes straight to TP. I want to be completely wrong, whether it's by timing, whether it's by direction. I it doesn't matter, right? Because yes, this could have maybe sold up here later, but that just goes to show that this position here was wrong. I don't want to see this take my stop loss and then um give me my TP. Because realistically, if you're using a correct invalidation, once the invalidation is met and your stop loss is hit, technically you could be seeing a type of model. Whereas here, right, you could see potentially a structural disruption. And if I was actually wanting to trade against that, which is a very, very hard thing to do, right, it would have been possible to even, right, take a 70, a Fibonacci buy, you know what I mean? And then this actually would have been a very decent position. Right. And this is what I like to see. I like to see my losses cause a new opportunity because that just means that my model wasn't wrong. I was wrong of my timing and direction and all that at the time. Right. But then I could have potentially taken that. So yep, that was my loss of the week. I was hoping that this would have paid me out, but I actually this is the same time when I was selling USD CAD, which is also another form of hedging. If you guys don't know, like I'm selling USD CAD and I'm selling AUD USD, although they don't necessarily inversely correlate. They do have the USD factors. So by default, if if by default there probably will be a loser and a winner, but I can probably walk out with two with a type of return, if that makes sense. But yeah, any questions, concerns with that? Do you consider the momentum price takes into given POIs when making your decision? It depends. It depends. It depends. It depends. Like I think you're referring to this. You're referring to this, right? You're referring to this. Yes. Yes, I do. But it depends. Because although we reacted from here, I'm not gonna trade the sell, even though I'm not opposed to it. If you have a reasonable approach as to how to sell based on this type of move, whether it's a high momentum coming into a very deep POI that's taking out liquidity, as you guys can see here. Um, maybe I've seen some people do it, and I'm not opposed to it. I just whenever I look for any type of model or how I'm going to go about a trade, I want to make sure that I can replicate the same scenario all the time, right, and make it coherent enough to be understood, right? And this type of trade, although I'm not going to say it's not a good trade, I'm not going to say it's not a bad trade. I just would find this type of scenario from a tradability aspect to be a lot harder, like to replicate, if that makes sense. But it just depends. Like here, I don't care about trading this. I care about the reaction and then playing based on the reaction, which is why I was looking for, right, this POI to then give me the sell. But good thing I was wrong because that would have pissed me off if this kind of just died from here. I hope that makes sense. But any questions, concerns, guys, with any of the trades? Because other than that, that's kind of all the positions I have for today. Feel free to start showing me you guys' case studies. I'll be right back. I'm gonna go use the restroom really quick, and then, but before I go into the case studies, I want to go over DXY, and we can go over crypto too. We'll go over crypto in a bit, but give me a sec, guys. Oh shit, that's loud. Anyways, cool, cool. Have some case studies, but yeah, let's go ahead and go over dollar here for a bit because it's pretty interesting. I noted a couple of things. We'll go over this dollar first. Um, First things first. As you guys remember last week, right? We were on here. We're here. Sorry, here. We were looking to see if dollar was going to continue higher, right? And with this sequence here, right, the fact that we swept this and had right I'm gonna just call it a type of doji, but just a big rejection candle. We'll just leave it at that. The fact that we had that is very key. If you guys recall what I was talking about with the USD CAD trade, right, where I was wanting right that push up and then that rejection, that's what I wanted, right? But you guys can see it here visually on dollar. That's kind of what I wanted with that scenario to wick my 70 retrace my 70% fib and give me the rejection. But this is the reason why that's important is because you cannot anticipate this. You cannot anticipate this. You can't predict this, but once it does happen, it can be a very clear sign. And personally, like I think we've topped out. If I'm being honest, I think we've topped out. Because it was either going to be we're going to reject here or we're going to sweep and then go lower. And I believe this is like a 70% retracement here to begin with too. Ish. No, I'm not going to consider that. But we do have the rejection. We have the reaction there. And at the beginning of the week, like I think Wednesday or Tuesday, I was actually looking for this. I was hoping we would come back here, and then go lower. And then I'm hoping for this here. I think Thursday. Yeah, Thursday, Wednesday. We run here. I'm like, okay, come on, give me the push to the upside, and then let's see this actually die. But now honestly, I would kind of like to see right Friday's highs or something like that. May preferably come back into this POI. Personally, I'm gonna take that out. I don't want to see that immediate continuation. I want to see this come back maybe to the daily POI, give a reaction, give a rejection, and then that's where we see a really big swing because that would actually really support like the UJ bias. If we're looking at Euro USD, like we've already rejected this previous high, we've already reacted from here, right here. If we have maybe like a type of divergence where dollar goes up, but um, I'm sorry that EU goes down, but I don't want to see this go too far. Like I don't want to see this. I don't want to see this POI be topped. I'd rather just see maybe equal lows at the very most be swept because then we would have equal lows being swept and we have order flow completion so that then we can get like a potential sweep going, right? And that would actually be preferred to then maybe start challenging, right, these premium pricings up here. But yeah, for the most part, I want to see this closure from yesterday to propel us a bit higher. DXY. Same thing here. I want to see maybe potentially coming back into the buy to sell and then give me a downside move. Easy. Just because of the reaction. And now we've given some type of big move to the downside. Let me see. And something that's interesting too. Oh, we also have the structural disruption that we talked about last week, and then that just kind of rolled over. So I want to see maybe hopefully come back into this buy to sell. That would be cool. But yeah, that's kind of like the gist. I don't see this going, like we said last week, um going into the high of the previous range, right? I don't want to see that. And then last thing, I was looking at cryptos because you guys know that we had the big liquidation move. Actually, I don't remember this. What is this here? I didn't trade this. I was just looking at this, but personally, like I don't want to be a crypto hater, right? But I was talking to my friend. You can see there's divergence here with Bitcoin, Ethereum. Talking to my friend, and I don't mean it like in a bad way. But as soon as retail's telling me that they're like fully deep in crypto now, like especially now after you had the big liquidation event, I'm like, bro, let's take these guys out and then let's look for positions, right? So personally, I want to see this go a little bit lower. I would love to see right below. right back into the 2900s on here. I would love to see, right, potentially right below this, right? Like I want to see below this, right? I want to see this maybe give us a move to the downside. Um, and then who knows? But personally, I would love to see this top out for a bit and give us, some type of reaction. And who knows, maybe even see the last sell to buy here. Who knows? But yeah, I did note this. I wanted to note this because I am probably gonna try to see if I can sell some to have some shorts this weekend. So I'll be looking at that today and tomorrow. I don't know. Does anybody here trade crypto? Anybody? No? Right? Like I would love to see, right? Person would love to see CBOS continuation. Give me the sweet model. That would be lovely. But yeah, that's kind of it for this and that. Let me go ahead and start case studies. Okay, OFD. I like it. This is textbook OFD. We are reacting from that external. So this external POI, internal POI, nice. Um, I like the OFD there. I like it. This is nice. This is nice. I like it. I just don't know if like me personally, the issue I would have here is I don't know if I would want to take it from here or if I want to wait. I wouldn't do this. I would more so do this candle just to be sure, but I don't know if I would do one or the other, but preferably I would like this. And like the inner greed in me just wants to like potentially take the entry here and then maybe put the stop loss like below here, but it's kind of like going against the invalidation rule. But that's just kind of the thoughts that I'm having over that. Yeah, you see. Yeah, like the inner greed in me, just out of intuition, I want to put my stop here because I know that realistically I want to see that. But yeah, it's a good trade. Very good trade, bro. OFD to the T. Very nice. Cool. This one, I like it. Yeah, I like it because of this. I just don't think this is a model, but I'm not opposed to the position. I just don't know how I would have taken it here. Yeah, because it gets awkward. It gets awkward because of that POI that you noted. This POI makes it awkward. That makes me kind of just like not really not really my type of trade here. Maybe now if I was to get like an LGC, then I could justify the move. But at this moment here, I just couldn't justify it. Even here, like I couldn't take this, like I couldn't take that because of the reaction here. So I don't know if maybe this would come mitigate and then go lower.
I think yes, I'm like target the wrong level. I should have
Mhm,
targeted like the beginning of the zone right there. But I
mhm,
think that after taking my stop, it went all the way back up, but didn't break over there. I think so.
mhm, mhm. This one, I like the idea. I would have liked for the POI maybe to have been tapped if it's a valid POI, but I like the idea of potentially sweeping here, because you're kind of looking at bearish range, high being swept, coming into the low. But at this time, I think it's still too soon. I would love to see maybe order flow completion engulfing or order flow completion, internal OFD, and then the move. I just think it's a bit early. Yeah. Oh, this actually worked out. Nice, 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 nice. So once this breaks, you can definitely go break even. So this is something that I kind of go um back and forth on is when we see the reaction from the POI and it gives me the big move to the downside, but it doesn't give me the internal LGs outside of like the micro. So here I'm okay with like moving your stop here. I'm looking for every excuse here to move my stop because if you go back to your first position, right, this is potentially unwillingness here, potentially unwillingness because we broke here and it looks like we're coming from a bearish trend. So because we're coming here and willingness breaking this, right, it could make sense to have a type of 70 fib up. So the issue with maybe moving your stop here would be that, I mean with holding this position would be that. But two, it's like if you don't move your stop and you keep your invalidation up here, right? Like you're risking, let's say we're here, you're risking all of this profit for this return, which is a negative risk to reward by default, you know? So because it's a
Yeah, in
negative risk
fact,
to reward by default, then I want to, for example, fuck it, I'll just move my stop here, whatever. Like that way I can secure at least a 1 to 2.5, 1 to 3 before, right? Seeing the opposite move.
yeah, in fact, stopped me right
Mm-hmm.
here. I didn't move
Mm-hmm.
it, and it was like, kind of make me upset. But also by this one, I
Yeah.
was like a little bit. Um, I noticed that one, and
Mm-hmm.
like I was thinking that maybe it could have, you know, came to sweep this eyes, or sweep also this one, and that's why I kept my invalidation right here because I was like, okay, cool, come back down because I saw many times trader I was taking and then was coming back, let's say, all the way near the entry and going again. So I was like,
Mm-hmm.
maybe this is the time, but here is just wrong. The fact that I kept
Mm-hmm.
the invalidation right here, I should have moved at least, to here or to
Or
here.
just take a partial. Just take a partial. That could
I don't
also
want
be
to
a
take a partial
solution.
because it screwed the risk reward, like from one to
Yeah, but
six become one
fuck the
one
risk
to.
reward, bro. If you're gonna end up with a loss,
Yeah,
you
that's
know what I
also
mean.
true.
So if
Yes,
you can't
yes,
justify moving the invalidation, then just take a partial.
yeah. But I
It's
think that here
it could be
the
give or
whole
take.
idea it's because
hmm
the structure was against me. Like
hmm What
if
day was
if you
this?
go
The
to see right
14th?
now, yes, I think so.
I didn't take this position, by the way. Um, the 14th, what session?
Um, if you can come back to my chart, I will tell you.
Uh,
I think was right before US session.
oh, here. Here. Yeah, structure was against you.
Because this week I was in this weird mindset of like going like reversal instead of continuation, and I was
hmm
trying to like anticipate every reversal, and it didn't, came good.
hmm Yeah, this is actually like a very clean um a very clean model here. I did see this earlier this week. All right, where sweep, we can have the engulfing, and then that justifies the move to the upside. And then we have another internal model here. Sent it in the free Discord. Okay, cool. But yeah, there's actually see this is one of the hardest things that I've faced personally. And just because it just goes against it goes against, for example, if you're taking a position, then you're 100% confident that it's gonna fucking win. If not, then I don't know why you're trading, right? But if you're taking a position, you're confident and you see the possibility or the probability that it's probably going to win. And when you see it fail, right? That's the cool thing about the invalidation concept is if it fails, then you have the opportunity to trade the inverse, right? That's why you can't let like one, maybe two losses as a scalper just kind of take you out and just make you quit for the day. Even though preferably I would like to have like two losses and then I would just be done for the day. If my invalidation is done correctly, perfectly, then the inverse would occur. For example, here you can see that once your invalidation, which was here, right?
Yeah, yeah,
Mhm. Then if that invalidation is met, then you can see here that there was actually the possibility to buy.
Yeah.
You see what I mean? So that's like a mindset. I don't I want to consider it a mindset thing because you're going against the same things that you're justifying the reasons why in terms of why you're trading. So the reason why you're entering the trade, but once you see that fail, then that's also like intuitively in your head that if you lose, then okay, I'm wrong, then I just don't want to trade anymore. But the fact that we have the invalidation concept shows that if we do fail, then the possibility of the inverse is also present. Does that make sense? And that's
Yeah,
something
makes
that I still
sense.
struggle to today. It's something I still struggle to today. Like if I take a loss, like my AU trade, like if I take a loss there, then potentially I have the opportunity to trade the inverse. But a lot of the time, um that's just not something I'm thinking about at the time because clearly, like if I lose, like I'm like annoyed, then you know what I mean? So that's something to think about, right? Because outside of that, the only other critique is like, look, bro, the if you're taking this, your TP is here.
Yeah, also.
Internal model, external target.
Yeah.
Because outside of here, you then have like potential buy to sell to buys. I just wouldn't hold out outside of that. I see the equal lows here. That's my target.
Yeah, I think all today that my problem basically it's not about the skill. I mean, about the skill I have to, sure, like perfect it, like make it
Hmm.
better, but it's about like psychological side because like I don't consider some things, and just for being the market, sometimes I take some shitty positions. Like instead, there are weeks that I'm way calmer. I can take 3, 4 trades in all the week, and I do way better than weeks like this. This week, I think I made like 7, 8 trades, and like I got like a ton of PE, like break even, just
Hmm.
because I was trying to anticipate a possible reversal.
Hmm.
And sometimes I think it's more I have to like put everything together, like put like strict rules and apply to them. And that's also why I didn't like get the opposite. Like I got the
Hmm.
stop and I know that the price is going to be like much higher and take the position again because I was afraid to take again another stop, and that play like a big part, a big role.
Hmm. 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 Yeah, exactly. So it also is something I do want to do after I finish the books. Um, I want to clarify what an A plus setup is. Like, for example, like it's easy to say high probability, it's easy to say low probability, but it's hard to say why something is high probability, why something is low probability. So I would, for example, if I was to just think off the top of my head, an A plus, this is an A plus here, implied sweep, even sweep model, whatever. A plus because we have one, or if let's just say I'm looking at the traditional sweep, right? In terms of direction, we have one, and then we have two structural levels if we're taking a buy here, per se. We have two structural levels that are in alignment. In terms of liquidity, we have the sweep model, which is creating the frame, and then potentially internal sweep here, maybe if we're zooming in. But we have this liquidity, which would be if we have a model present and we have the direction present, right? Then execution is really just now whether just how you're going to enter the position, right? And for example, we already have direction, which would be two levels of structure. Let's just say that would be the criteria for an A plus direction. Let's say the liquidity, if we have a sweep model, that would be an A plus setup. And three, the execution would probably be either, let's just say we're looking for the sell to buy. Let's say we're looking for the, sorry, let's say we're looking for the, let's actually zoom in here. Let's say we're looking for the Fibonacci, which would be, let's just say, I don't know if it hit the Fibonacci. No, it didn't on anyone. Yeah, so it didn't hit the Fibonacci. But let's just say that we're entering here based on this, right? This. So then let's say, for example, we have an internal model. The execution is very, very flexible. Like I told you guys, like I'm not opposed to taking a support resistance position if you're supported by liquidity, by models, by bias, etc. Right? Like that, it doesn't matter. It doesn't matter about what you're using, it's about how, right? So now, depending on how you execute, is really just irrelevant. I think more importantly, the number one thing is obviously direction. That's why it's first, and then number two is liquidity. because that's how you kind of find your timing, find the area of where you're going to execute off of the direction given or the direction that you've dictated or just analyzed. The execution is the freest part. So what I want to do is also try to solidify what would be the exact A plus, what would be the A, what would be the B, right? Because for the most part, since I only look for like one or two different models, and the fact that I brought up market loss to you guys, right? Like I can show you guys that here in a bit if you guys want that again. But if I'm following liquidity, if I'm following my direction, if I'm following the external models, internal models, then I have an A plus setup. But I just want to have that prime. I want the concrete, exact. This is it. If it isn't this, then it's not that. Does that make sense?
Yeah,
Because you guys know that
right.
I'm big on that. I'm like with the rules and stuff. Like invalidation concept isn't the definition is not where I would put my SL. It's the invalidation would be the external solidified point based on the position that you're taking. That just it's more digestible, it's applicable, and if it's applicable, then it's trackable, and if it's trackable, then you can make it better, right? So yeah, that's just the gist here. The only mistake that you made was I think the target should have been potentially here. If I'm correct, right? Am I looking at this the right way? This is
You're looking at 15
did I
October.
look at did
It's
it
14.
14?
This
I'm looking
one's,
at this wrong right here.
yeah, this one right here.
Oh, I'm stupid. My bad. This is the wrong one. Where am I looking at? Where am I looking at? Here.
Exactly. Yeah, yeah, there.
Oh,
It's
okay, then yeah,
14.
no. This is no, I wouldn't have taken that cell. I wouldn't have taken this cell because we're overall bullish. But I see what you're trying to do.
Yeah.
You're trying to maybe take Asia high and then look at the transition. I like it. I like it. I would like that if it's inverse. I would like it down here if it's you seeing the inverse and then the move up.
Yeah, I mean, I'm
Um,
trying to anticipate something that doesn't exist still. That's the
mhm,
point.
mhm. Because you can get the execution right without the direction liquidity and get the reaction. So if you are good at reactions, then and I good at execution, sorry, then you can actually not lose if you're able to move your stop or take partials or stuff like that. So just leave it at this. Bias. The liquidity would be the application of the bias, and then the execution is the timing.
Okay.
So yeah, no, I wouldn't have taken this position. Yeah, my bad. This is completely wrong. Sorry for the rant. Anyways,
Right.
let me go over to Peter's. Okay, we have more case studies actually. Cool. The 1 minute, okay, I like it. I like it. I like it. I like it. That's a traditional sweep model. I like it. I really like it. I would have just I would put my TP here, bro. I would put my TP here because we're potentially looking at an external model. So even though this may not be following the criteria because we're technically bullish, I would just be safe and either put the TP here or here. Very nice, bro. Yeah, this I really like this. This is a very nice traditional sweep model. And why do I like this trade, guys? It's because of this. This is what gives it away, right? Like I said to Peter earlier, the external sweep is the bias, but the internal move or this there's no internal sweep here, but this is the timing aspect, right? Whether you have the internal transition or you have the internal sweep, that is the timing aspect. If you that's the back then, if you guys were around back then, I used to call that from the Wyckoff POV, that's the SOS, the SOW, the sign of strength, sign of weakness, right? The showing its hand, right? That's what I used to call it. But yeah, this is excellent, excellent, very good trade. Uh, I'm not the biggest favor of I'm not the biggest fan of this one just because it's a CBOS. We have low into high CBOS. This could potentially continue, and then that's when I would look for a position. The completion of order flow there. Oh, wrong one. Sorry. I see. Okay, this makes a lot more sense now. I see why you're taking it now. Okay. I see now because this is a LGC based on the external move. So okay, so this is valid. Okay. Based on the M1, I wouldn't consider valid, but based on this, yes. Because you're seeing the external CBOS and then you're seeing the internal LGC as an alignment. So then this would be like a sweep. Nice. Nice. Nice, nice, nice. Okay. Okay. So here, it sucks because like I said with the M1 is that this was a CBOS, but if I was you, as soon as we see the entry and you see the follow through here, it's 100% justifiable to put your stop loss here, even though there is no LG. Because if you are to now break this high, then you now have structural disruption, right? You have the inverse, right, model, which would then be, let's do a different color, low, high, retracement. Like let's say I would take a 70 fib, stop loss here, and I don't think the stop loss ever hit here, but it ended up completing the order flow. So um this is okay. I would have just moved my stop here and you cut your risk in half as well. Because the thing about, for example, these moves, these types of sweeps and continuations in these models is right. If they're gonna go, they're gonna go. Like if it's right, it's gonna go. Right. Like you're gonna see this. Right. And do you guys understand why this happens? Like just from a bigger POV. Do you guys understand why this is also why I'm preferring sweep models over everything, right? Do you guys know why this stuff happen? Like why this happens? Like these big moves that are fast in your favor. Do you guys know why this happens? Anyone? Exactly. Exactly. And what that means, if you're taking liquidity, if you're offsetting one way, then by default, there's only one way left, right? So there's only three things that can happen. It's going to go up, it's going to go down, or it's going to stay in the middle. And if it's staying in the middle, then enough liquidity has not been cleared. If it's going up, then the downside liquidity has been taken. And if it's going down, then the upside liquidity has been taken. So you have the release of orders, pending orders, positions, stop losses, TPs. Doesn't matter. It just means all this is showing me is that there is liquidity, there is money being taken out the table. So if there's enough money being taken out the table, then we get these moves. How do you know if you have enough money to see a move like this? You don't. That's why we only execute based on the models, right? And you can aggressively move your stop loss or you don't. But usually if you're kind of standing still or if you're seeing reactions like this, right, then not enough liquidity has been taken. So either aggressively move your stop, close in profit. That's then up to you, right? But I just want you to know what's going on. All right, so those are still both good trades. Okay. Execution one. This is very nice. I like this one. This is the AU trade. Um, Yo, Peter, so you trade AU during Asia because that's kind of like your morning time, right? That's
Yeah,
your morning
I
time.
trade that for lunch.
Okay. Okay, cool. So that makes sense. Um, I like this because you have this, but more importantly, you have the completion of order flow here, right? You see the completion of order flow here, and then solidified low is taken, right? So now if you have a CBOS, that just means you could use a fib from high to low, and you see the retracement, but you didn't, I don't think you got a deep enough retracement for 70, and then you got the execution internally, right? This is an M1 trade
I look
or
at that
or
in
a sweep.
M5.
Uh-huh.
Y-
Could you
Yeah.
say it again? Could you say it again?
Oh no, I didn't look at it in M1. I just look at it in M5.
Okay, so M10 and go off.
I assume there's
Mm-hmm.
M10 and go,
Mm-hmm.
but
Let me see.
I don't have M10.
What date was it?
I think my day and yours is a bit different.
What Asia session? Wednesdays, Thursdays.
Let me check. Hold on.
I think it
It's,
was Oh, this is Monday. This is early in the week. This is here. Yeah, this is Monday
Yeah.
or Sunday, Sunday, Monday, whatever. Asia session one. Let's just say that. So your position was here. Okay. So did you take your position off of the engulfing or because like let's see if this actually did give it. Yeah, I did give the 70 here.
Yeah, I just took it off in
Mm,
golf.
okay. On M5?
Yeah.
Okay, so you assume this to be an
Yeah,
engulf
I
here, these two
assume.
candles. Uh-huh. So
Yeah.
that's good because look at this. This is the what I've been trying to talk to you guys about is the completion of order flow is when that immediate low that creates the high is taken, right? So when this low that creates the high that's pushing to take out liquidity, when that's taken, like that's actually technically like an implied engulfing. I don't want to call it that though, but this I call it the completion of order flow. But once that happens, then any position here is 100% valid in my opinion because the solidified low is being taken. So yeah, it's very good. And it's during prime time, which is good too as well. Um, nice, nice, nice. Yeah, so this is during the news day. I was actually looking for a position here. I just didn't know when. Um, but here, did you try your stop at all on this one?
Yeah, after the second position, I didn't take it, but I saw that
Mm-hmm,
and then I was like, yeah, I have to
mm-hmm,
go
mm-hmm,
buy and sell.
mm-hmm. So you could always leave it at the OFD, which is right here because you have a reaction. So if that breaks, then you have invalidation. But here, it's always like I also find it difficult to hedge a position because it goes against everything that as to in terms of the reasoning why you're taking that to begin with. But that's also a possibility. But here, this is kind of I'm sure this is what you saw, right? That's kind of what gave it away.
Yeah, yeah.
Yeah, that's good. That's very good. Just the
What
internal
would you
sweep.
say that's a SD or like a
Let's look. Based on this time frame,
I just
high, low, yes, because you have high and that's solidifying it. Because every candle high, every candle low is a structure point, even if it's on the seconds or on the minutes, every high and low, because obviously the daily candle is composed of intraday candles are composed of scalp is composed of micro, et cetera, et cetera, et cetera. So yes, it is SD here. So once that breaks, that is SD. And that's why you're able to take that position because it's a SD model. And you're buying at a discount, which is good, you know?
yeah. I
Mhm.
didn't actually take the second one, but
No, yeah,
just the
I'm
first
just saying
one.
theoretically, yeah.
Yeah.
But yeah, very good. Because you still walk away with what, like 1.5 R ish?
Yeah.
Mm-hmm.
Around one.
Mm-hmm. So yeah, that's good. That's good. But cool. Any more questions, concerns, guys? Because I do have, I am gonna do a Spanish Zoom after this. Any more questions, concerns, guys, or can we wrap it up here today? Cool, cool, guys. Once again, a pleasure to have you guys on here. I think you guys are all improving pretty nicely. Um, I don't know, maybe the sweep model's kind of been game changer, don't you guys think? That's why it took so long on it. I'm trying to get all the rules and all that kind of set out. But let's see. I don't think I have any other announcements or anything like that. Because like I said, for the private members, I'm gonna be making I made like a small cheat sheet, like I said. it pretty much has like the structure rules. I'm gonna update them if I need to, and then pictures of the three models plus the regular sweep. Or I don't know if I probably just include the regular sweep. That's fine. And then the another big problem too, right? I don't know if you guys know this, but the do you guys ever hear people say like, how do I say this? The like intuition and people talk about how some things you can't explain. And I used to say the same thing. And when it came to like intuition, like I'm just kind of taking this based on intuition, or I'm kind of like looking at I did this because it's something that I'm just getting an idea of. So have you guys ever heard that stuff? Yes or no? Yeah, and I've been trying to figure out how to give that or like how to note that or how to use that because let's be real here, like I could say that I'm taking this because of intuition. That's cope. That's BS. Like that's cope. Like that just means I'm not able to explain what it is that I'm thinking, but it's a gut feeling that I'm kind of just using in my favor. Because if you guys don't know or don't know, like always trust your gut feeling. Doesn't matter what the fuck it is, always trust it because that's actually tied to like energy and like survival instincts and all of that stuff. But that besides the point. Like if you have a gut feeling about something, always use that. But what I've been doing is that's what I'm gonna do with the cheat sheet is every time that I lose or I win and an idea comes into my head, like just the first detail I know, that's what I would have considered intuition, but I'm just writing it down now. I'm just noting it on a small like document and I'm gonna just kind of just list them all out. Like I have stuff for trailing stops. I have stuff like intuition. Like I'll give you guys a new one that I added. Right. Do you guys let me pull up the indicator. A lot of the time I've seen, I'll leave it at this before we end the call. Um, let me see if I have here, let's just say. So I have my London session right here. Oh, that's my New York session. It's the same thing, right? Let me actually no, let me use another one, a good example. Right here. No, not that one. I want to find a good example. Here, perfect example. Where this was last week's trade, I believe. Yeah. Um, where I'll see a move present itself and give the opportunity before the session opens, right? So do you get what do you guys think the point of like kill zones are? What do you guys think the point of it are? Like why do you use kill zones? Why do you use optimal like times to trade? Like what do you guys think is the point? High liquidity, high volume, liquidity. What do you mean by liquidity? What do you mean? Volume, volume, volatility, exactly, volume. But that is obviously a basic idea, right? Like that's super basic idea. But like the application of that is like just because you have volume during the optimal trading times, that doesn't mean that you're going to get the entire position in terms of bias, opportunity, execution, delivery in that time period because those time periods are very small, right? So I've actually completely changed my mindset on the kill zone times, where the kill zone times does not have to give me the opportunity to enter. The kill zone times, the whole point of them is to show me that this is when the momentum, the volume, the momentum of the session is supposed to happen or is potentially going to happen. So that means that prep time is like very important now. So like that's why I really like to see a move. I used to be pretty against this, where I would get like a like something present itself before the session is open. But realistically, that makes more sense. Like it makes more sense to have the opportunity present itself so that you can then catch the session volume, right? And it's the same thing with news. That's what made it make sense to me. The news, for example, news events, you guys, yes or no, a lot of the time, like let's just look at AUD USD when we had that big move to the downside. Here. Uh where was it? It was here, right? The volume here that came in from the news, right? The opportunity came either during or before it, right? So That's why when people say news happens for a reason, right? If we're already seeing this and we're taking a 70% fib, even if let's say it's not following the solidified rule or whatever the fuck, the setup was presented before the volume because the news event is just meant to give you the volume, not the opportunity. Therefore, by default, the opportunity is coming before the news event. So it's the same principle. Just as we're getting the volume from the news event at the time of the release, the opportunity is presented way before because obviously you guys can see here this range was created. Oh, wait, am I? No, I'm right. I'm right. The move is created before the news event, right? It's just now a matter because the invalidation was never touched, right? And then the volume from the news event is what gave you the TP. But what I'm getting at is the setup was presented before. So it's the same thing because all news events are volume, high momentum moves. So if a session, a kill zone session, is giving you the volume, then the opportunity has to come before it. Right. So now it changed my mindset where I don't necessarily need to be up for a London session. I could just look at the interval between the closure of my Asia and my London to see if it could give me an opportunity and then potentially get the volume through London. So I want to, you're pretty much ahead of the game, right? And that's essentially what you want to be as a trader because obviously from retail, the news event, after that's been released, it's too late to continue, right? You're already too late if the news event already released, right? You see what I'm saying? So it is stuff like that that like comes to my head that I just think about, and now I'm just trying to note it down. And those intuitive things, like I'm just noting them down on that cheat sheet, and then I'm for the members, it's gonna be free. Honestly, I'm making it really cheap, like for like the public. I'll make it like $50 or something like that, like something super cheap. But you guys see what I'm getting at? You guys see what I'm getting at here? Right. And it just let that sink in. Think about that. Like you want the volatility of the kill zone to propel the idea that was developed before. Right. And if the kill zone and that's why you see the news releases be during the kill zones, right? Like that like you see what I'm saying? Right, like my New York is actually the stock exchange open that but you usually see the like NFP and all that a little bit before. But I'm even thinking of like extending my kill zone for New York from like 7 to 9, and then like my London from 2 to 4 a.m., which is like the first 2 hours. But yeah, I think you guys get the gist. But I'll just leave it at that. I have details like that I'm noting down on the cheat sheet. It'll be free for it'll be free for my members, but for the public, it'll be cheap. But yeah, we'll just go ahead and leave it at that, guys.